It's Tuesday the 29th, I'm FX Plu and this is CurrencyTransfer.com's market update. So the main headlines today are that the Italian crisis is deepening and the election could be a quasi-EU referendum. Sterling falls as the Bank of England and Treasury disagree over regulations post-Brexit, and the dollar turns to reactive territory. So yesterday we had a public holiday in both the UK and the US, so trade was thin for most of the day, and with nothing on the calendar to drive momentum, sentiment provided much of the initiative. The big story, of course, is Italy. The crisis in Italian politics deepened yesterday as the president nominated a stopgap prime minister, standing by his decision not to approve the coalition's choice for finance minister. He has nominated a former IMF economist, Carlo Cottarelli, as interim prime minister. And a fun fact, he's known as Mr. Scissors for his cuts to public services. So a new election will be needed over there, and whilst this could be held as early as August, given that most of the Italians tend to be on vacation, it's more likely that we won't see this before September. And it is now being carded as close to a referendum as one can get without actually being a referendum. Euro-dollar broke the support of 116.80 pretty convincingly, dropping to a low of 116.06. I think we've got plenty more on this story to run. In the UK, there has been a spat. In the red corner, we have the Bank of England. In the blue corner, we have the Treasury. The clash was over financial market regulations post-Brexit. But it highlights a slightly greater role that the bank is taking in behind the scenes in the UK's departure from the EU. The headline issue is regulation, which is a stated responsibility of the Deputy Governor, John Cunliffe. But the dispute comes from the bank's wider concerns over the contingency plan, or lack thereof, for a no-deal Brexit. The sterling headwinds have driven cable down to a recent low of 132.95 and sterling euro down as low as 113.07. There is indeed further downside risks to this if the Brexit proposals, which are due out in a couple of weeks or so, don't deliver on established promises. So it's over to you, Treasury and the government. Play your cards right. Yesterday, cable closed around 133.10 and performed a little better against the euro with the political issues facing the single currency, and sterling euro closed at 113.75. Over in the US, the recent dollar rally, it was originally driven by dollar strength, which drove the euro down. The key drivers then began to falter. Trump's foreign policy initiatives started to become less than well received. The US monetary policy became a little bit more reactive once again. And then the yield on the long-term debt, which was a key support, appeared to have topped out. So now that swings back. So the US dollar is a lot more reactive, but the index is once again now being driven by euro weakness. Same net effect, the dollar strengthens, and indeed this situation is unlikely to change until Italy's political woes are worked out. This week, once again, it's all about Non-Farm Friday. Non-farm payrolls are due out on Friday and will bring the usual frantic activity over the headline number, which once again is forecast at around 185 in the positive. We may get a little bit more clarity on this as things play out tomorrow with the ADP employment data, which is once again forecast at 185. We'll keep you posted, but hold off placing your bets until a little later in the week.